This is True Multifamily, the show where we dive in on what really happens after closing a multifamily property. We're going to expose the role of asset manager. That's the person who has the responsibility of seeing the vision, executing the plan, and managing people, budgets, and timelines, all to deliver returns for our investors. These are the real struggles, the real victories, and the real stories of asset management. Welcome back to another episode of True Multifamily. I'm your host, Justin Fraser, here today with Andrew Schutsky. Andrew, thank you for coming on the show, man. Pleasure to have you here.
Pleasure's all mine. Thanks so much.
I'm glad to have you on. And, you recently had me on your show. We had a lot of fun on your podcast. Before we do anything, tell people about that podcast and name and where they can find it.
Sure. So the show's name is Crushing Cash Flow. Our official debut is March 15th. Probably by the time this is released, it'll be alive and well. And we're actually on iTunes already. We're kind of in the marketing phase.
Awesome.
It's all about real estate investments, and the name kind of goes into those who are out there crushing it, as well as those who have been crushed by business, their investments. So that's kind of the tagline behind it.
I love that. We get real on this show and we talk about the wins and the losses. And
right.
Yeah, we've all been crushed. If you've been in this business long enough, you've had some pretty tough days.
Oh,
so, yeah. I love it. I love the show. Thank you for having me on. We had a lot of fun. So guys, make sure you go check out Andrew's show over there and give him a download and a rating and review. We got to support our friends here in the podcast biz.
I love it.
So, Andrew, tell the audience a little bit about you. How did you get into investing, and what kind of projects are you working on right now?
Absolutely. So I'll take you way back real briefly. The seed was planted really early for me. I've always had an interest in especially in real estate from an early age. I was that kid who would play Monopoly for hours and hours and hours and bludgeon my grandparents and my parents playing for 3-4 hours. And ironically, my son picked up on the same thing. So he does the same crap to us. So the seed was planted early. Maybe I ignored it for a while, went through the normal high school, college thing. I was always good with technology. So I went down that career path for a while. But my first opportunity and my first really investing piece was, unintended, but I bought my first single family house. I was young. I was just about out of college, 21, 22 years old back in 2007. And bought my first single family. And I kind of learned about, before the coin was officially house hacking, I was like, maybe I could just rent out part of the house and live there very inexpensively. At the time I was traveling like 50 weeks a year for management consulting. So I was never home. So at that I was like, okay, let me see what's out there. I put out I think it was a Craigslist ad back then, and I got some tenants in there, and I was living very cheaply. And I was like, wow, this is pretty cool. I could do this. So I had really low expenses. Started to look at other single family opportunities, got a few out there in Delaware, Pennsylvania area. Fast forward about 5 or 6 years later, started to get into the short-term rental business down the Jersey Shore here area. And we're still down there now. That was a lot of fun. What I came to realize is I tried to scale that business, the VRBO, Airbnb, requires a lot of cash outlay for not a lot of return. Again, very fun. We still do it today on this, kind of on the side, but as you look to scale to 2, 3, 4, or 5 properties, for even with, my wife and I are very blessed to have 2 working incomes and we do very well, but it's really hard to grow and scale from that. And eventually at that point, you want it to become your main source of business. I had to look elsewhere. So we continue to look for more and more, on the smaller multifamily scale. We're looking at like 6, 8, 10 units down in Florida and everything. And even that, it's a lot of work for not a lot of return, and you can't go that quickly, right? So we started to think more and more. I started to do a little more research, and it really wasn't until, sad to say, it wasn't until maybe midway through last year that I really did a lot of research and landed on the multifamily, the larger scale piece on the syndication side. And I turned to a buddy of mine who I used to work with he's a commercial broker down in DFW, super hot market, as you know. Mm-hmm. And he works for a firm called Graysteel, and started to pick his brain. And I feel like that was the inflection point for me when I just went all in. I read, 20, 30 plus books in a 2-month period, took a bunch of courses, started to network my face off, built the LLC and the apartment syndication business very quickly, hired a mentor, and then, kind of just started putting my name out there, going to the multifamily events, et cetera, and went really fast, really hard. And it was tough to do. And it still is tough to do with a full-time job, 50 plus hours. And I'm devoted to that as well. And I enjoy it. But that's kind of my 3-minute pitch into how I got into multifamily.
Yeah. Well, we have had some guests on here that are full-time in their jobs. and we have had, the opposite, and a lot of our listeners are mixed as well. But what's the thought process behind, thinking, look, I love my job. My wife loves her job. We're going to do this on the side.
Yep.
Talk us through that sort of decision and what you're expecting in terms of, hours, when you're going to be working, how you're going to be working, because obviously you're tied up during the day.
Yes. Yeah. And I'm one of those guys that like, hey, I really want to run out of my job. Like, we're very fortunate. I worked really hard to get where I am in the corporate side of things. I really enjoy it. I plan to do it for a while in parallel. So the way I've been making it work, and number one, having a very understanding wife has been really tremendously helpful as well.
Yeah.
And if she wasn't on board, I wouldn't be able to do it because it's a lot of sacrifice, right?
100%.
There's no magic bullet. I pretty much have to dedicate, between 6:30 in the morning till 4:30, 5 o'clock at night for the corporate work. Maybe, occasionally you get, a lunch hour investor call in, but I don't count on that really. That's the exception, not the norm. So a traditional time blocking. I know you have a project management background, so do I. I tend to view the world of like step A, step B, with some strategy thrown in, but really it's my normal 6 or 7 to 5 during the week. And then the weeknights are for investor time, work on the website, writing blogs, doing the podcast thing, doing some editing there, marketing, branding, networking, bigger pockets. So, really it's that
a lot to do. It's a lot.
Second job kicks in at 5 p.m. It just gets going. And then the weekends, I lean on a lot of the early morning hours. So like my kids fortunately are good sleepers. So they don't get up until, I don't know, 8 or 9 o'clock at the earliest. So I usually fill that 5 a.m. to 8 or 9 a.m. window and I hit it hard then. So that's how we made it work. Everybody's different. I'm an early riser and my energy tends to taper off later in the day.
Yeah.
So I try to just hit it hard or hit it early in the day.
Wow. That's tough, man. That is tough. Blocking off the time makes sense. But yeah, you've got this other big commitment. So are you, I know you have a deal going on now. Like, are you planning, are you doing it all yourself, start to finish, from finding the deal, underwriting the deal, raising the capital, or have you brought on some partners?
Absolutely not doing it myself. And and honestly, since I'm looking at mainly buildings of, I'd say mid to larger scale, 80 units and up only, there's no way I'd have the time or the experience for that matter to do it on my own. So the kind of the way I found my way into this deal was I just kind of started, everybody I was meeting, just kind of telling them, like you and I talked, hey, this is what I'm trying to do. This is what I'm good at. And for me, I really enjoy the investor relations, the marketing, the packaging. I mean, it kind of goes back to what I do in the corporate world, right? A lot of it, I'm in the tech side of things, but a lot of my job is not traditional like coding or anything like that. It's a lot of the sales and marketing, business value realization, the financials, managing multi-million-dollar budgets. So I kind of, my background leads me to the investor relations side, to some of the financial pieces. I've got a lot of work I've done in construction on the single family and the kind of the more wholesale commercial space. But that's kind of been my background. And in this deal, I've been contributing a lot on, again, like building the story behind it, making the numbers work, working with investors, helping raise capital, et cetera. So, and I'll stick to that mold. I mean, my time's limited. You know how it is. It's tough. Working, like I said, 50 hours a week in your first job before you get to the second. So I'm trying to really focus on what I'm good at and just working with people who can complement that. Like I don't have time to look at 200 deals a week, right? I enjoy that part of it, but just being realistic about, I'm working the W-2. I'm going to have that for a period of time. Let's stick to what I'm good at, which, like I said, is the investor side and a lot on the raising capital.
I absolutely could not agree more. Like, even when we are full-time on the full-time side, like we are focusing, each team member is focusing on what they're really good at. Because if I'm trying to do everything, I'm going to get spread too thin, and I'd rather do what I can focus on and what I'm good at rather than, something that's foreign to me or I'm not so great at. So, that's really great. So I want to talk some details, nitty gritty. You make this decision last year that you want to get into larger multifamily. Now you're part of a team. So let's bridge that gap a little bit. How do we go from the educating, being on Bigger Pockets, listening to podcasts, to even finding the right people that you want to work with?
A great question. And again, there's no magic answer. I'm not sure I have perfected the process, but
well, your answer will do.
yeah, no, that's cool.
Yeah.
So like I said before, I was just hammering away. Like I got out of this multifamily conference in I think it was December or January, and I was meeting with, I don't know, 10, 15 people a week for a period of weeks and just trying to find out like, hey, where is there potential? Like, where is that crack in the door I could kind of work into? And I met an individual based out of Florida, and we were talking, and he's like, "Hey, I've got a couple things going on," and I'm like, "Hey, great. What could I help with, or what could I potentially help with? Here's my background, here are my strengths." And he's like, "Hey, I've got this thing going on in Georgia. I'll send you some details. It's early on the process. We're still negotiating, but I was like, look, I really love to help you guys pitch or package it together. I'll sweep the floors. Like, I mean, I just want to get in. I mean, I've got lots of real estate background, just not multifamily. So whatever it is, I've got a job. I don't need like a huge cut of the income. Just let me help out. Like, let me bring some of my corporate experience to this and my single family stuff." And they're like, "Great. We have a lot of deals going on. We could just use the heavy lifting." I'm like, "Great. I'll be the mule. I mean, that's fine. I mean, it's a little humbling, right? But you got to start somewhere." So that's kind of where my head is.
Absolutely. Yeah. And you have some real estate experience to go off of, but this business, this 100 unit plus property business, is a new business for you. And you've got the absolute right attitude. It's where can I help a team? Where can I add value? You're not going to get rich on this first deal, and probably not the next deal or the deal after that, but eventually you'll build up enough experience and credibility that you will be comfortable and confident running your own project, and it will start to pay off. And I'm sure that's why you're doing it, because you can see that long range vision. Too often I talk to people that are like, "Okay, how do I make 50,000 a month next month?" It's like, well, I don't know. Don't ask me, because I don't know. It takes a long time to build, a reputation and experience, and you'll get there, but it's going to take some time.
Absolutely. And then for me, maybe my incentives are a little bit different too. Like I said, we've got jobs, we plan to keep them for a while. And yes, there's a financial freedom aspect. It's probably, 10 years down the line and be able to do all these cool things in my family. But what I realized which is unique about multifamily versus a single space is you're not only helping yourself, you're helping dozens or hundreds of other investors. You're helping other people, you're partnering. There's much more camaraderie behind it. And being in like kind of a networking relationships guy, I love that part of it. And that's what got me hooked.
I say this all the time on all of our episodes, but real estate is win-win-win, right? The tenants are winning because we're investing in the property and making the property better. The staff is winning because we're employing them. The investors are winning because they're all making money, and we're winning because we're making money too, and we're building a business. So everyone gets to profit and succeed together, which is one of the best parts of multifamily investing for sure. So let's talk about that. So you approach them and you say, "Hey, I've got some corporate experience. I want to be involved." How does it now? Let's just pause real quick. You guys have not closed yet, right? As of
correct.
Recording?
Yeah, we're hopefully, fingers crossed, a matter of weeks away. We're
perfect.
Kind of
so you're a few weeks away. How do you negotiate with this team? How do you figure out, best role, best compensation for that role? Just talk about that a little bit.
So yeah, it was a little bit of a trial and error too. I mean, because I maybe I underbid myself too, just to get my foot in the door, and that's okay. I mean, mainly I just wanted to get in, and the kind of lesson learned for me is, maybe I should have been earlier on the communication process about who was doing what, because I kind of put myself out to do probably more than I should. So it was a little bit of, okay, what can I help with? And then, okay. And I was partnering with 3 other gentlemen, and one guy is doing a lot of the heavy lifting and I'm helping him out. I knew what his cut was. So I said, hey, I threw a number out there and said, hey, how about X%? I don't know exactly how much I'm going to be able to raise, but I have pretty good confidence, the number is X, whatever it may be. And he's like, okay, cool. Whatever you can do to chip in. And I was like, look, I'm willing to dig in to, help you with the property management side, asset management, just to get the reps in too.
Yeah.
And I threw a number out there and he was like, cool. I was like, I probably went too low, but again,
you always get that uncomfortable feeling when they accept your first offer.
Yeah, I know. Exactly. But again, I'm not doing this to get rich. I'm doing it to get experience, working off the experience. Like the main GP here has got almost 3,000 doors. So he knows he's been in the business a long time. So I consider it, I was telling the guy, I consider it an internship more or less.
Yeah.
So
Man, you got such the right attitude,
yeah,
because when this thing closes and you're operating it, you're going to be able to point to this deal and say, I was a part of it. Right.
yep,
And you're not going to, maybe I don't think you should go on Facebook and say, this is my deal. Look what I did, but
yeah,
I'm a part of this team. We did this together.
correct.
I contributed. Here's what I learned. And, you're going to carry that through to your podcast and the lessons learned there.
Yep.
And you just, now then you'll be that much more confident for the next one and the one after that.
Absolutely.
So give us any sort of lessons learned or surprises that you might have had through this whole process of working with new partners, and how big is this deal? How many units?
It's a 94 unit.
Okay. So bringing on this 94 unit through the
Yep.
due diligence phase, through the capital raising phase, what's something that, is surprising to you that you weren't expecting based on all the research and education you did beforehand?
And this, I should know better from doing all my single family rehabs, et cetera. But, I wish I had gotten down to the property earlier in the CapEx planning process. And you being an asset manager and kind of getting a feel for everything, you kind of know what could go wrong. But like, I feel like we're getting little bits of information released from the property manager through the way, the guys that are boots on the ground. And I'm like, crap, this would have been easier because we already started the raise, right? So we already have a number in mind, we already have projected returns. Nothing major yet. I mean, but I'm kind of factoring in a cushion for unknowns like galvanized piping, mid 70s build, like, all the dangers that can come with that. But, I think getting boots on the ground, as soon as you have that offer accepted, time permitting, of course, for me, I should have just taken a weekend day and gotten down there, but so it just would have made the communication and process smoother. Cause like once you have, how it is, once you have the attorney docs drafted, like PPM, OM, it's kind of firmed up, and those changes become exponentially more expensive or, painful to communicate out to the team. And with 4 people involved, and they're in a bunch of different deals. So communication is key. And that's, personal, professional, whatever it may be. I can't stress that enough. It sounds like a cliche, but the earlier you can kind of voice your concerns, the better everybody feels. And you're a little less stressed out that way. So whether it's you find something else in the property, you're like, oh, I gotta put another $200K. And they're like, no. This is what it is. So you're like, okay, lesson learned. We probably have enough padding anyway. It's no big deal. But next deal, if it's a 200 unit or 300 unit, the ripple effects are there. So
the expenses get large. The expenses get real large if you miss something. And even if you don't miss something, sometimes there's just expenses. Yeah. I'll give you an example from this morning. Oh man, my property manager called me. We have some sewer lines that have been clogging up, and we did some investigation and exploration, and turns out the sewer lines are under some of the buildings are just totally degrading, and they're just falling apart. And we scoped a lot of the sewer lines. I guess we didn't scope that building or those buildings over there, and so we're going to be in trouble as far as the cost, right? It's going to be somewhere around $250,000 for everything to be done. But the good news is we have contingency. We had some money in place for this already. And we have enough that we can move around. And we've actually had some really good cost savings on some other big projects. So believe it or not, we can absorb an extra $250,000 cost without actually impacting our bottom line or anything. But that goes to just showing you, like, there are always surprises, and hopefully yours is not a $250,000 surprise, but these things tend to happen,
It's all depend on the scale of the property. Yeah. Like $250,000 on a single family house would crush.
Oh, well, no, that would kill you. This is a, $18 million project I'm talking about. So it's proportionally, it's not as big. Yeah.
Yeah. So in my world, if it was a $50,000 expense, it hurts, but we can weather that. No big
exactly.
We plan on the
figure it out
to an extent. Right. But it's always like the roofs, the HVAC, the plumbing, the big ticket CapEx items, a couple of water heaters here and there, even 10 of them. Yeah, no big deal,
Yeah, and you should be building that into your CapEx plan anyway. I mean, we always build in a number of water. We figure, a third of the water heaters and a third of the HVACs are going to go in the first year, because that's just how it goes, right? Absolutely. So we always build those into our CapEx plan.
Yep.
It's just, these things go. And you would think, especially like, oh, we just got through the summer, presumably they're all working, right? You would think. And then it's like, no, actually all of them are broken.
It's even in our single family world, the short properties, et cetera. Like as soon as the rental season ends, it's like, for us, it's like early September. Like there's always some leak. There's always some kind of HVAC issue. It's like day one, oh, here's a $10,000 bill. So, you just think about that at scale when you have 100 doors. I mean, it's,
Yeah,
Yeah.
that's tough. That's
Yep.
tough.
Yep.
Well, Andrew, this has been very educational and informational for anyone that's looking to join a general partnership team, add value, get into the multifamily space. So helpful. I want you to let our audience know, you already mentioned the podcast, you mentioned that again, where they can find out more about you and your company. And then I'm going to ask you for a true multifamily tip. So start with the promotion.
Absolutely. So as far as how to get a hold of me, so the company is called Redline Equity. You can find us on the web at investwithredline.com. We're on Facebook. We're on LinkedIn. Send a bat signal, whatever it may be. My email is Andrew, ANDREW, at investwithredline.com. Crushing Cash Flow. Again, the debut is coming up March 15th. By the time you hear it, it's likely going to be in iTunes, all the major streaming media, Spotify, iHeartRadio, all that stuff. So looking forward to connecting with you guys.
Great. Okay, Andrew, if anyone missed any of that, Andrew's information will be on our website, truemultifamily.show, his bio, his links, all of that great stuff. Andrew, someone approaches you and says, Andrew, how do I get into multifamily investing? What is your true multifamily tip for them?
So for me, it's a 50-50 of absolutely relentless education and networking, right? Because I think one without the other, uninformed networking doesn't leave you in a good place.
Yeah.
And lots of education will leave you as a professor, not as an investor. So to me, it's 100% full tilt on both of those. You know, without a doubt, you'll find something. So
I could not agree more. Such good advice. Andrew, thank you for coming on the show. If you guys like this episode, please leave us a rating and review. We love to hear from you. Thanks so much. Check out Andrew's information on our website, truemultifamily.show. Andrew, hope you have a great day, man. Thanks for coming.
Thanks, brother. Appreciate it, man.
Thanks for listening to another episode. Check out our website at truemultifamily.show. And if you have an amazing story to tell, share it in our Facebook community, and you might just be the next guest on the show. We're also on all other social networks. Just search True Multifamily. I'm really proud to have the show produced by our company, On Air Brands. Check us out at onairbrands.com. We also have an incredible, unique podcasting event that we would love for you to be a part of. Check that out at podmax.co.